A top story in the Wall Street Journal this morning addressing time limits or work requirements on tenants who move into public housing, whose benefits are currently open-ended, unlike welfare recipients with 5-year limits. Joining us now with more on this is Vining Sparks chief economist Craig Dismuke. Craig, good to see you. Thanks so much for joining us.
Thanks.
Your thoughts on these new proposals?
I mean, I think any proposal that encourages people to go back to work are going to be positive. Currently there are, I believe it's 13% that of the Section 8 housing programs that do this, that have time limits and various work requirements. And so I think expanding that certainly would be positive.
But how do you characterize the overall housing market? It was a long time coming in terms of the recovery there. Do you think we finally have gained traction?
I think we have more traction today than we have. And I think if you go back to 2013 and look at what happened when mortgage rates rose basically 1%, then they started to come back down pretty quickly. There was a big drop off in housing. And we saw existing home sales fall 12% during that time through 2014. And they've since recovered that. We're now up 1% from the 2013 peak. But the underlying trends are better. So when you look at things like all cash buyers are down to 24%. Investor purchases are down to 14%, down from at 1.50% of the market. Distressed sales are now down to 10%. So we see some of these underlying statistics that make it look like housing might be more stable and might be able to weather a small increase in interest rates, which I would expect we'll see with the Fed likely to hike in September.
Well, don't you see, though, the people that are buying houses that they're getting all these new programs. There's like in Nevada, they've got a 4% mortgage and you get a 4% grant from the government. So we're getting back into the no money down type of housing. So is that real legitimate buying, or is it more manipulated or pushed through by the cheap money? The whole philosophy that we've now gone into is to just keep throwing money and keep sweeping under the carpet, because there will be no rate raise this year. I mean,
well, and that's. So I think that I agree with your point that we haven't learned our lesson from 2006, 2007, and we're starting to make money cheap again and trying to stimulate the housing activity and kind of reinflate the bubble. So that certainly is a piece of it. I think the Fed has been very intentional in driving down mortgage rates to try to reinflate housing, and so the real question is how durable will the housing recovery be if rates do rise? And again, I don't think rates can rise very much, and one of the reasons is for the very fact that the housing market is still very tenuous.
But it's not just housing, right?
Well, I think that the biggest thing right now is that we've seen all the starts, right, are in multifamily, 5+ units, that kind of thing. So, and it's really what I describe as rental nation, right? Everybody's renting. So what's going to drive all those millennials into home buyership, right? The home buyer, the ownership rate is the lowest ever. I think that, so that's going to have to, again, that's going to have to be some type of tax change or some type of way to get the money for these people.
There's no loan liquidity. You can't borrow any money.
Well, outside of housing, what about the consumer? You had retail sales last month were down.
Right. Well, that's what I was getting at. It's not just housing. I mean, this economy has been incredibly weak. I mean, weaker than some of these headlines indicate. Look at the earnings period. Today we're expecting a lower opening because of what's going on with technology. You see what technology companies are saying. Their guidance stinks. The earnings are okay. And if you look at the S&P 500 Capital IQ numbers, they're basically expecting earnings to be down better than 4% for the quarter. That's not such a great economy.
No, and so I think one of the things that you guys are hitting on is that the rental market is, in this economy today, that's probably the hottest space of all the sectors in the economy, which is kind of sad.
It's very sad.
And maybe we had too many people that owned homes back in 2006. Maybe we needed a higher rental rate. But today the rental vacancy rate's down to 7%. When you look at the inflation numbers, and this is interesting, of the 1.8% core CPI that we got last month, 1.3% of that came from rents.
And the Fed said they're not going to look at that.
Right. And so it's ironic.
Big.
That's the only thing that's giving us inflation.
Exactly.
Absent rent increases, there's no inflation.
So where does growth come from in second half of the year? I mean, Dagen's mentioning the consumer. Other people are mentioning CapEx and corporates. Do you think those two items lift us out of this sort of growth stagnation?
No, I mean, I think we're stuck in stagnation that we've been stuck in for the last 6 years. I mean, we're averaging, since the recession ended, we've averaged 2.3% GDP on a quarter-over-quarter basis. If the end of this year plays out the way everybody expects, with a 2.5% GDP in the second quarter, and then maybe 2.8 or 3 in the second half of the year, we're going to be, guess what, 2015, we're going to be back at 2.1% GDP.
Right.
Another year of weak growth. I do think we see a little bit stronger second half because of some of the tailwinds to the consumer, gasoline savings, et cetera. We have a better labor market. I mean, there's more people that are employed, et cetera. They're not great jobs. A lot of them are part-time jobs, obviously.
Is this all enough to really get the Fed to move?
Employed.
Yes.
Come
they
on.
want to move. They
It's
want to move
all-
before
you
the
call these
election.
jobs-
You say yes. You say
yes.
September.
It's all about
Yeah.
financial conditions, and financial conditions right now are stagnant at best.
They stink.
It's an a Fed increasingly watching Washington and people, so they are concerned about doing something before you get into the election year. Anybody who says different, well, I argue with them.
Yeah, I think they raise rates. I mean, I think they end up raising rates. They need to get off zero.
Yeah.
But they're
And
not
the political
going to.
story is also important, but what Dagen brings up, it's true.
She already said last Wednesday, December. She said in her speech at Humphrey Hawkins, we're thinking about December. They didn't mention anything about December. I mean, September. They're
But
talking December
Bullard
now.
said that there's a greater than 50% chance, he told Peter Barnes that, there's a greater than 50% chance they move in September.
Until something else happens and they come out with
I bet you're right. I bet you it's December.
The only way the Fed is going to move is if the stock market has a big rally. If the stock market rallies large, then they'll move in
Only
September.
300%, they still won't move.
They are not moving.
We'll keep talking about that. Craig, thank you very much for your insights. Craig
Thank you.
Dismuke joining us.